I can't do it.
Okay.
We'll do it live.
Okay. No.
We'll do it live. Fuck it. Do it live. I'll write it and we'll do it live.
Right.
Fucking thing sucks.
In 5, 4, 3.
Anyone claiming that America's economy is in decline is peddling fiction.
I've abandoned free market principles to save the free market system.
But we have to pass the bill so that you can find out what is in it.
Raising the debt ceilings does not increase our debt. It does not somehow promote profligacy.
I know words. I have the best words. Nobody knows the system better than me, which is why I alone can fix it.
What's up, everybody? Happy Friday. Welcome back to the Peddling Fiction Podcast. I'm rolling solo today. I think Justin forgot that it's Friday and he might be sleeping. So I gave him about 30 minutes to get his act together, but I haven't heard from him. So I figured I would just go live solo, see how this goes. We can watch the markets closed, shoot the shit, whatever you guys want to do. Chat. Okay. But yeah, I wanted to kind of go through the markets. I was going to do a weekly market commentary anyway, so I figured now's as good a time as ever. We can watch this market close. It was, dude, what a crazy, absolutely crazy week. I mean, even for just the stock indices, the Dow Jones is up. It crossed over 50,000 today for the first time ever. So I'm sure if you have CNBC on or something like that, that's what's on the chart here is the Dow. If you're watching the video, I'm sure they're going ballistic over on CNBC about Dow 50,000. I saw Kramer posted about it when he first started working. The Dow was at 1,000. The problem is that's all it's almost just a measure of how much the dollar has declined over time. If you price it in gold, the Dow's probably cheap. I haven't actually done this with gold where it is right now, but I bet you it's actually cheaper than it was when Dow was at 20,000, 30,000, 40,000, even at 50,000, but with gold near 5,000, very near. Gold's at it's up $176 right now, 4,952. So the metals are rallying off of another just absolute free fall yesterday. And so it's been a week. This is 1 week after silver had that massive crash. I would say manipulated crash. I think a lot of people would back me up on that. Actually, a lot of evidence would back me up on that as well. Bitcoin also had a terrible day yesterday. It's rallied up 12%. Here's the Bitcoin chart. If you remembered, I pointed out this channel right here. This is a bear flag pattern. And I told you Bitcoin was about to fall off a cliff back in December. I tweeted that out. And it took a while, it took a month or two for it to actually completely break structure to the downside. I think I identified a head and shoulder pattern on the last episode really quickly. So this would be the right shoulder, is the left shoulder, here's the head. And the neckline here is right about 75,000, 74,000, something like that. And we've broken below that neckline. And the way you measure that is from the top of the head, which is about 100, peak Bitcoin, 126,000, to the neckline, 75, call it 75,000. So, 50,000. And you measure that downward if it's a bearish head and shoulders pattern, which this is. So you're looking at $25,000 Bitcoin potentially. Now it found some good support around. It tapped 60,000 here yesterday, and you got a nice reaction off of that, but you are certainly not out of the woods when it comes to Bitcoin. Michael Saylor, the biggest buyer of Bitcoin, is underwater on his position now, which is mass. I think he spent it's like $55 billion or something ridiculous. He's been buying Bitcoin for the last 5 years, and he's now underwater on his position. His average cost was $74,000. So even with a 12% rally off the low from yesterday, well, I say yesterday, but it was really when Asia started trading today. I forget how Bitcoin doesn't stop. So, but this is after the New York markets closed yesterday. Bitcoin absolutely tanked, and it hit 60,000. But even after a 12% bounce from that back up to 70, he's still underwater on his position. How long he can hold out in that regard is anybody's guess, I suppose. But if he has to start selling Bitcoin, I don't know who, first of all, I don't know who he's going to sell it to. And when the world's biggest buyer of Bitcoin becomes the biggest seller of Bitcoin, that's not going to be good for the price either. So he's going to be caught between a rock and a hard place, because he's supposed to be paying these dividends to these preferred investors in Strategy, in the stock. Now, typically the way dividends work, as we go into the close here, let me pull up the, you don't really need to watch Bitcoin. It's not really moving that much, but let's watch Dow 50,000 ring in and it's going to close on the highs of the day here. Let's move down to a 1 minute chart. This is a daily we're looking at now. Let's see if they just slam it in the last 3 minutes or if it rips even higher. So yeah, pretty nice afternoon for Bitcoin, or for the Dow here, and a big day overall. The where did we open at? Where's 8:30? Yeah, look at this move. Just gapped up at the open, and it's been off to the races. We'll go through some of the structure stuff a little later, so I can put you guys to sleep. But as far as Bitcoin goes, these dividends, I don't know how they're paying them. It's just return of capital, I guess. They're just giving you back some of your own money that was invested in the stock, because they don't generate income. There's no business there that has a profit that they can take a portion of the profit and pay it to investors. That's typically how a dividend works. You take a portion of the profits and you distribute those out to investors in the form of a dividend. Or if you're like one of these things that have become all the rage lately, these covered call dividend paying ETFs, which they're nice if you need dividend income. Like if you were like a retiree or somebody that's just trying to live off of your dividends, those things are nice, I suppose. If you're not a very sophisticated investor, where you just kind of put your money into an ETF full of things that you want to invest in, and every month they spit out a little dividend for you, but they're always going to underperform the underlying asset. So a lot of these, there's actually there's a few of them that track the Strategy stock, and they were paying these massive dividends, and people, these were all the rage a couple of years ago. Now they've kind of fallen out of style because they don't generate enough dividend income from the options, the covered call options that they're selling. That's supposedly how they were paying all these dividends, but in reality, a lot of it's just return of capital. They're just giving you back some of your own money, and that just has a devastating effect on the net assets under value. So there's what you call NAV decay over time, and they've had to do a bunch of stock splits and stuff. This is the MISTY, MSTY stock, all of those. So we are gonna dump right at the close there. Just sold off about 40 points in the last minute on the Dow, but still finishing up above 50,000. 50,101 is the close, it looks like. And that, maybe that's a blow off top. I don't know. I definitely don't like to see it kind of reverse like that and form like a horseshoe like that. But kind of what I've been talking about in these markets has been happening, which is just so like a melt up kind of thing. Now, something that's kind of interesting. Let me zoom out back to the daily here. So I identified this trend line apparently a while ago because this was just on my chart. And you can see that that zone that we identified, this inefficiency here, this also held. And we got a nice move out of there. If you look at the trend line here on the Dow versus the other indices, the NASDAQ, although it did have a rally here, look at the NASDAQ. The NASDAQ did not make new all-time highs. Since what was that high back in October? So it's actually failed to go higher. It's put in relative equal highs now, but look at the, look at the trend line between the last like week or so. Where is that? There we go. Look at that. It's the exact opposite of what's been going on in the Dow, and the NASDAQ is all those tech stocks. S&P 500 has been trending upward as well, but still failed to make a new high. So we're going to have to see if the S&P 500 and the NASDAQ are sort of telling us something that this thing in the Dow, this might be a short-lived new all-time high. And maybe they're not going to make new all-time highs. And maybe we're headed back to the downside. Only time will tell on that, but that can be a kind of indicator. Usually when you get two of the indices doing one thing and one doing something different, the two are telling you something, and the one is just kind of a head fake here. But we'll have to see. Dollar index, dollar caught a bid this week. You saw it was down below 96 briefly, and it's rallied above 97 now. So caught a nice little bid here when the metals were dumping, which was just that move in silver. With the move yesterday, and I pointed this out on Twitter. You should follow me on Twitter if you don't. I think I have a pretty underrated Twitter account, but anyway, I said when silver, before this candle printed here, we were probably around like 76 or something, maybe between 73 and 76 dollars for an ounce of silver. If you can kind of picture that these two candles hadn't printed yet. So all you're seeing is this. I wish I could get rid of that label. All you're seeing is that. And now look what we have here. We've got relative equal lows. This low being lower than this one that was put in a couple days before. That's unfinished business. Remember, we talked about this on the way up when it came to the NASDAQ and the Dow Jones and the S&P 500 when there was that big spike down a couple of months ago. We talked about that, how they leave these relative equal lows in place. They will be addressed later, almost without a doubt. So when you saw this rally here, back up into this zone, which is one of our, this is a bearish inefficiency here because it's all sell side. Okay, there's your zone. All right, so we put in this low, which is slightly higher than these relative equal lows here. Look how smooth that is. The market does not leave smooth edges like that for very long. And as you can see, it tagged it just today, last night, actually, during the Asian session. So, but before that, we had this rally back up into this inefficiency here, could not make it to the midpoint, which is very bearish. We cut through every bullish indicator on this big move down. Now, granted, this was completely engineered. It was completely engineered by these fucking banks and all these crooks in the banking industry. We can go into that if you guys really want to, but I think I kind of covered it a little bit on the last episode. But you know, when you're going up, you want to see these red candles support price, and you want to see these zones of inefficiency support price. And then when you have like a cluster of them right here, you want to see that support price. And it cut through this candle. It cut through this inefficiency right here, like a hot knife through butter. It cut through all of these red candles and closed below them. That is, if you need any further indication that we're going lower, I don't know. Like, it's literally a big red flag that they're waving saying we're going lower. Where could it go from here? This is when it was at 85, and we're like, oh, we kind of got a nice reaction off of 74, and then you had 2 nice up days, and people were thinking, okay, maybe the bottom's in. No. It's gonna, as soon as you think the bottom's in, not when you have these relative equal lows and that smooth line right across there. They're gonna rake it through one more time, which is exactly what they did. So yesterday was another huge down day in silver. And then Asia swept those lows, and look at the respect of the bodies here, right? And they're above this whole, like all these, the body here, goes back to December 24th of last year. All these bodies are respecting this level right at about 72 for whatever reason. I don't know. Go figure. I'm sure it has some sort of meaning in terms of options contracts and expirations and things like that, which today is a big options expiration day as well, Friday. And so that's another reason for them slamming it down. I'm sure they had a bunch of options expiring today. Okay, but so you got the sweep of the 70 level that I pointed out on Twitter, you know, a day before it happened. Then boom, you got it, and you got a nice reaction off of it. Now we're going to have to see. This doesn't mean that we're out of the woods either when it comes to silver and precious metals. This is a completely allowable move in a bear market. This move back up. Now we want to see, if you're bullish, you want to see these 2 green candles. You want to see them get cut through pretty easily. You don't want to see them providing a lot of resistance. If you're bearish, you want to see them support price going lower. So we're almost there, right? That's about right at 79.18 is the bottom of that candle there. And we put in another, let me get rid of this one just so we don't have too much lipstick on the page here. So now we've got, silver's still going to trade for another 50 minutes or so to close out the week, but we've got another, as of right now, we've got another zone of inefficiency here. Okay, where this is, after this candle, it was all sell side and nothing else. So personally, I'm cautiously optimistic that after sweeping these lows at 70, I think we're going to start moving higher. We've got a nice swing high that it just put in here with these 3 candles here. That's a swing high. We've got this pattern here, which kind of, you have a low here, a high, and then a lower low. And it's kind of showing an unwillingness to go lower than 70 so far. So Sunday night is going to be very interesting to see what happens. People have a couple days to digest this, and we'll see what happens when Asia opens on Sunday night at 6 o'clock. Whether we get a nice move up here, a gap up, could be possible, or maybe they start selling immediately. You want to watch this zone to see how it trades, and you always want to grade it. It's big enough to grade, and I think that's 5 points in silver. So we'll see how it trades in here. Like always, we want to see it. If you're bullish, you want to see it get above the midpoint, close above the midpoint. If it can blast through that, even better. But if it provides resistance, or remember up here, it couldn't even get to the midpoint, not even strong enough to tap that midpoint, then you can have some confidence that it might be going lower. And maybe it's going to test this level here between 50 and 55, where we do have another, this would be a bullish inefficiency there. So if this support right here at 70 does not hold, that's kind of the next zone that I'm looking for some support. And it does line up nicely with this, you know, these relative equal highs at 53, right? So we'll see if that becomes the new floor. But as of right now, I would be cautiously optimistic that now that we swept everything below 70, I think anybody that was long has been swept out of the markets aggressively, and anybody that had a short position on has probably covered it, and all those banks were able to get out of their shorts probably in profit. I'm sure they saved billions of dollars manipulating these markets. I mean, think about it. You know, this is when you're going to sell something. If this was just profit taking at a blow off top, why did it all happen at the exact same time in like a couple hour long period? When you're selling something, you're trying to get you're not trying to crash the market because you want to get a higher price. So if you're dumping a bunch of silver onto the market, you're tanking the price. Nobody that's concerned about collecting profits is going to trade that way. You're trying to sell into these rallies to keep them, you know, you don't want to break the market to the downside if you're trying to take profit. So a move like this is completely engineered. And it basically fell. I mean, the low we got was $64. Is it the low on this candle? Yeah, 64.10. It's basically a 50% drop in less than a week in a precious metal. So that is pretty wild here. But we'll have to look to see how it trades in this zone to see if maybe we're going to take out these swing highs. And if it does, then you can have some confidence that we're going to start targeting these relative equal highs here and maybe put in a new high in silver at some point. I don't know how long it could take to get there. It's also possible. I mean, this is a big range here. It could easily just chop around in there for a while too. But Sunday night's going to be pretty interesting to watch. Gold has been much stronger. You had the big sell-off. Oh, there we go. That's all the old zones I had on here. I hadn't erased them. Just so you know, I don't cherry pick any of this stuff. But this was an inverted zone that we wanted back here. We wanted to see this inverted back in January, and we got it. And that's sort of what sent the market like ripping higher, was after it got above the midpoint of this zone, and you see the respect of it there. It was just off to the races. I mean, look at that. Look at how it just stops right at the bottom of that zone. You can't tell me that all of a sudden after what is that? We went from 5,600. Did we tap 56? 56 down to 4,400, and all of a sudden it just stopped on a dime right there. That's where the buyers took over and drove the market higher. I'll just never believe that. But hang on, we got a little too much. So I drew a fib on here just to see where we were, and you know, we've gone into a discount. We went into a discount. It looks like we've come out of it now, which just means that we're below 50% of the leg of the move, which is this midpoint here. So we came down to a discount, found some support just right at a random place, random zone right here. And it caught a very nice reversal. We put in a swing high. I'm going to get rid of all these things because it's too much for me to look at. And it's probably driving you guys crazy as well. So we did not get that second leg down that we saw in silver yesterday. We got a move down, but you can see we didn't put in a new low. We didn't sweep any previous lows. This looks a lot more bullish. So gold may be carrying silver higher in that regard, but we've got another swing high right here and the same sort of inefficiency in price delivery that we're going to be watching on silver. We'll watch on gold. So as of right now, that midpoint is holding, but it's definitely showing an unwillingness to go much lower than 4,600. It came in and it, you had this gap in here, right? It filled that in. Well, it went through that, came back down into this zone, and then you got a nice little reaction from it. And now we'll see. I mean, it's having a big day. It's up 3.62% at the moment, up 173 bucks, 4,950. So even with all of that manipulation and just coordinated attack on these precious metals, they seem to be fairly resilient. Gold more so than silver. The crazy thing is when you zoom out, if you look at like a weekly chart, I mean, this might end up just being a blip on the radar, as ridiculous as these moves are. I mean, look at the wicks on these. These are crazy wicks. Like the wick on this candle, this weekly candle is the high is at basically 50. It didn't quite get to 5,600, 5,598.75, and the low is 4,682. So that is a crazy range. But if you look how far we've come just since last year, it was at 2,600 last year. So you still had a massive move. And even just since January, we opened up January at 4,300. Okay. So now we're at 4,900 a month later. I mean, that's a really good month, all things considered, for gold. But compared to where it was, you're down. You're down what, $600 an ounce. But to be able to be down $600 an ounce and still up 600 is really something. It is really something. I've been following these markets for about 20 years now. I've been investing in them for, I don't know, maybe 15 of those 20, something like that. Never seen anything like this. This level of volatility in the metals is pretty rare. Even for they say silver is pretty volatile. It's like, yeah, okay, but it's not dropped 50% in 5 days volatile. And most of that happened in 2 trading days. Let's look at the weekly chart of silver. So the weekly chart of silver looks a little more ominous. Get that out of there. But again, what do we want to see when we look at charts? If we're bullish, we want to see down close candles, the red ones, support price. And the last down close candle was back in December 2025. And that has supported price so far. Like we wicked through it this week, but look where the close is going to be. Assuming nothing crazy happens in the last 40 minutes of trading, which is okay. Maybe that's a craziest, and it's always crazy to assume, I guess, these days that there's not just going to be a massive dump at the end of the trading day. But let's see where we are on the midpoint. Okay, we're right at the midpoint right now of that candle. So we'd like to see, if we're bullish, we want to see it close above the midpoint there. This is the way I look at everything. And I think, I know when you're drawing a bunch of stuff and you're not really familiar with these charts, it can look a little overwhelming. But the longer you do it, you'll realize this is not a very complicated way of reading price action and market structure. compared to those people that put on like, 25 different indicators and VWAP and RSIs and Bollinger Bands and all the, I don't do any of that. I think that's, I don't know, we don't have to get into it, but I think this is a fairly intuitive and easy way to kind of read these things. So if this structure here holds, this down close candle from December 29th holds, we can anticipate higher prices. Now, if we get a close below there, then we have, and then this is all fractal. All right. Then we have basically a mirror image of what just happened on the daily. So we have a high here and then a low and a higher high. And if we break structure to the downside, we'll have exactly what we have on the daily. That was just a devastating daily pattern, which is right here. All right. High, low, higher high, and then we ripped through it and closed below it. And we haven't gotten the close below. These down close candles here that I'm highlighting, those would be the equivalent of the down close candle from December 29th on the weekly. So far the weekly supporting price on the daily, it did not. And you saw what happened on the daily after it didn't. That was about $90 silver. Went all the way down to 64 after that. All right, so that's kind of the rundown there on the metals. We go back to Bitcoin. Just a crazy, I mean, the moves in Bitcoin have always been nuts in my mind. Now, if you remember, well, maybe you don't remember, I did do Robbie the Fire's Run Your Mouth podcast a couple of years ago. And I was like, holy shit, dude, was that November of 2024? And it was. When I think Bitcoin was up here at about 100,000, it was right around here. And we were kind of going through the chart, and I told him I wouldn't be a buyer of Bitcoin above 65,000. And I identified this zone. I don't remember exactly what I said, but I remember pointing out 65,000, I think, and taking a lot of shit. And I probably should have said that you could start building in a position in this inefficiency here. But I remember pointing out these relative equal lows at the time, and none of this other stuff had happened. So the chart kind of looked like this, maybe. That's probably what the chart looked like. And I was like, okay, yeah, got relative equal lows here. I would like to see it sweep that before I take it higher. But yeah, you could start building in a position here just below 75,000 in this zone. Watch the way it trades in there. And if you did, like, it did just clip it. Oh wait, hang on. Let me draw it correctly. Maybe it didn't. Yeah, so I would have missed out on that move. But we are now back in the we have swept. So yeah, it cut right through that. And you can go back and draw and carry these zones forward. There's nothing wrong with that. 2 years back, I don't know how much relevance that has. I just haven't I haven't put in the work to back test anything on, especially on crypto, Bitcoin, something like that. But we'll see. We're right back up at that zone. If it usually, once you invert something, it's going to act as resistance now. So we'll see if that sends it lower or it's able to get back above it and use it as a springboard going up. But this would be below 65,000 is what I told people that, okay, yeah, you could maybe look to add to a position there. And, you know, all those Bitcoin bros were giving me a lot of shit. Now you would have, you know, you did have another, like I said, I think it was probably around 100,000. I forget exactly when I did it. It was probably like December 2024, something like that. So you did have this, you would have missed, like I said, if you had bought it at 75,000 or something, you could have written it up to 125. And yeah, that might have been a failure on my part to not point out that zone, but I don't even know if like I said, I don't think you would have gotten in there. You could have traded the one above it. There's another zone right above it. But generally when there's two zones like that, I prefer to wait until, because it's usually going to go through to the lower one. So I would have been, yeah, I probably would have had, if I was trading Bitcoin, and again, this is not financial advice or anything like that. If I was trading it, I would have been waiting for it to tap this zone here. And then I would have targeted this high and probably sold it at 109,325. So yeah, you missed out this move, but then that move was pretty short lived and it's been in drawdown since October of last year. But we may have just found support at 60,000. So we'll have to keep an eye on that. But I don't like the fundamentals of Bitcoin. There was, I saw a post, and somebody said, what is the Bitcoin industry? Like, what does it do? What is the Bitcoin industry? And when you think about it, like, yeah, and then other people are like, oh, well, Bitcoin's never going to go to zero. It can't go to zero. Bitcoin already is zero. It's nothing. It's quite literally nothing. It's just an equation that gets solved over and over and over again to create nothing. So it's already at zero because it's fundamentally nothing. Now, the price of that nothing, I don't think will ever go to zero. It might get low enough that it's sort of a distinction without a difference, where it's just like, okay, yeah, it's not zero, but it's at like 8,000 or something. And most people were buying it at 10, 20, 30, 40, 50, 60, 70, 80,000. They're underwater in terms of buying Bitcoin. Like, you have to decide whether or not you like, because these two things really, they are kind of mutually exclusive in my mind. You want Bitcoin to be an actual decentralized currency that people use, or do you want it to be some sort of speculative investment vehicle where you can put money into it and hope to become rich? Because if you just want Bitcoin to be this decentralized currency, then you should not care what the price, like, you just want it to be stable, really, and hold its value over time. It's like, okay, if it holds its value, like, if it goes down to 1,000 and it just stays at 1,000 for the next 1,000 years, then that could function wonderfully as a currency. You don't have these big price swings up to 100,000 and then down to, $2 or something like that. If it just stays around 1,000, holds its value over time, then people can use it as a currency, and it's holding its value over time. Okay. And there's a limited supply of it. Great. But the price shouldn't matter. And the higher up the price goes, the worse it actually is for Bitcoin being some sort of currency. Does that make sense? You know what I mean? Like, it doesn't have any intrinsic value. People are just buying it because they want the price to go up. They think the price is going to go up and somebody's going to give them more money for it in the future. And people, like, real believers in Bitcoin, shouldn't really want that. They should want the price to just, okay, settle on whatever the fucking price is and stay there forever. And then you could use it as essentially like a digital dollar. But yeah, if you're going to have these wild price swings, you just can't really have it. It's just not going to work. It's just not going to function. So you just want it to be stable, and it shouldn't matter whether it's stable at 100,000 or 10,000 or 5,000. And this whole Bitcoin industry thing, yeah, it's just, it seems like a lot of wasted resources to me. I don't know what all these companies are doing. What is there to do, really? It's just, you mine the Bitcoin, which I think the cost of mining a Bitcoin is like 90,000 now, the last thing I saw. So anybody mining it at 90,000 when the price is at 65, they're underwater on that. From what I understand, most miners, they'll just turn off those machines when the price gets when it's inefficient, when, it costs you more money to mine it than it's worth in the markets. Why would you be wasting your time? Switch over to another crypto. There's a bunch of them that you can mine. Now, maybe Bitcoin's the exception to that, because Bitcoin and people, they think it's going to 1 million or 2 million or whatever, 250,000. So they're happy to take the hit and mine it at a cost of 90,000, even though they can only sell it for 66,000, because maybe they're not going to sell it. They're just going to hodl. Okay. I don't see the fundamentals to have the confidence to hold this over a long period of time. And so because of that, I just sort of look at, I'm more focused on what I see structurally, technically in the charts, as opposed to, gold and silver, where it's like, okay, short term, you could absolutely see silver come down here and hit 50 again. Certainly plausible. I would be buying. I would be a buyer at 50. And I would probably be buying some call options as well. Because long term, the fundamentals of silver have not changed. Nothing changed over the last week in terms of what silver is needed for, how much silver is needed. And there have actually been quite a few, like when these options contracts expired today and the week before, like they're asking for physical delivery. And that's not normally how these markets trade. Really, usually they just settle in cash, and the options either expire in the money or out of the money, and you close out the position and you either collect your cash or you took a loss. Okay. Now people are demanding delivery, and they're draining these vaults of silver over in Shanghai, in London. Like they're like hundreds of millions of ounces of silver are being drained out of these things because people are demanding the physical delivery. And like we talked about, silver has real world practical uses. It's necessary in a lot of things, especially all this new AI technology. It's going to be needed by a lot of different countries. Any country that, they just had that Davos thing, they're all in on AI this, AI that. It's like, okay, well, that's going to require a lot of silver. It just is. Nothing requires a lot of Bitcoin. So it's much easier for me to sit through a lot of these types of drawdowns in metals than it is for me to sit through a drawdown in crypto, because crypto to me feels sort of like a game of musical chairs. And I don't want to be left without a chair to sit when the music stops. There's not going to be enough chairs for everybody. Metal, gold, silver, other precious metals, copper, palladium, platinum. Those have real uses in the real world, beyond just a medium of exchange. So it's easier for me to sit through these types of drawdowns. And also, one of the reasons why it's easier to do that than a lot of people sitting through Bitcoin, and part of the reason why we might have had this massive sell-off once you broke structure of 75 to the downside, is that people were levered up in crypto. All of these young people that maybe they made a bunch of crypto on the way up, and they don't, they're hodlers. They don't want to sell. They want to hold forever. And so they borrow against their Bitcoin to buy things because, nobody wants to spend their Bitcoin. The problem with that is the people loaning you the money are going to want those Bitcoin as collateral. And if the price starts tanking, you're going to get a margin call, and you're going to have to come up with some money to either post to cover the margin call, or they're going to sell your Bitcoin and take whatever they can get to cover the loan. So Actually, Peter Schiff was doing a Spaces yesterday, and one theory that he was saying was that he thought a lot of the sell-off in silver was people selling their profitable silver positions to cover their margin calls in Bitcoin. They were both falling at about the same rate and almost at the same price too, which was interesting. Like silver got as low as 64, Bitcoin got as low as 60. Like they were in the same range, but $64 silver when it was at 30 just a few months ago, that's a profitable position that you can close out and you don't have to, like I said, they never want to get rid of their Bitcoin. So that was kind of an interesting idea. I don't know if there's any validity to it, but certainly possible, especially if you're one of these hardcore Bitcoin guys that believed in it enough to lever up like that. You might liquidate some of your gold and silver positions that are in the money, profitable, so that you're not selling your Bitcoin at a loss. He and I kind of both agree that that's probably not the right move to do, but takes all kinds. To each his own. So anyway, a lot of that, these moves in Bitcoin, because people are really levered up, they're gonna spiral on itself, and the selling begets selling. So we'll see if that was all flushed out by the time it hits 60, and maybe now it's just people that aren't levered up that are just going to hodl. Maybe we'll watch it trade over the next week. Or like I said, next week is going to be very interesting. The next couple of weeks probably, and some pretty tumultuous times in sectors of the market that you wouldn't think. And meanwhile, we're near all-time highs on the S&P and the NASDAQ, and the Dow just made 50,000. So, I'm sure they're popping champagne over there in New York. But I think you're going to start to see, it's just kind of melting higher. And in my mind, that's all just inflation. And I think the metals are still telling you that. Even with these massive engineered pullbacks, they're still up big on the year. Like if you had just gone back to, just to put this in perspective, if you had gone back to, it's crazy. Just go back to November of last year. November, it was a few months ago, right? We're barely into February. So January, December, back in November, 3 months ago, we were at 50, we're below 50 for a lot of November. If you had told me, and when silver was trading at 47, that by February it would be at 77, I'd be like, wow, that's a very strong bullish market. But if I had told you that, okay, yeah, it was at 120, it's like, oh, okay, interesting. You do have to put these things in perspective. And I think the metals are still telling you what's really going on. And the Dow at 50,000 is fucking meaningless when gold's at 5,000. It's like, okay, so for 10 ounces of gold, you can buy the entire Dow. What was it? I guess we could do the numbers or something, but when it was at 2,600, the Dow was at 37,000 roughly. So I don't know, it's like 17. So this is all inflationary, and this is what you're going to see. The markets. But now we did get some pretty bad economic news this week. The jobs reports were not great. What came out today? Something, it's like consumer confidence or something. Consumer sentiment, inflation expectations. Okay. Yeah. So inflation expectations came down for some reason to 3.5% from 4%. And University of Michigan consumer sentiment, 57.3, up from 56.4 and the forecast is 55. Okay, so those, I guess those were good, but the job openings, unemployment claims, 231,000, 212 forecasted. The job openings, 6.5 million. They were forecasting 7.25. Non-farm payroll, we lost 22,000 jobs instead of making 46,000. So the economy is not doing great. Donald Trump and the Republicans are in some really big trouble here. They're going to get annihilated, I think, in these midterms. And obviously the first thing that the Democrats are going to do is try to impeach him if they take the House. There's even talk they might get some, they might even win some Senate seats. I don't know. It depends on how bad things get over the next few months or whatever. But we could, we could see some sort of a bear market in stocks, but I honestly, you might just see it melt higher like this, just kind of inch its way higher, because that's the inflation. They're dumping inflation into the stock market. So you could see the economy continue to get worse and people struggling and the dollar declining and stock prices keep going up. And it doesn't make any sense to anybody. Well, it's like, yeah, because the stock market is not the economy. When you have a Federal Reserve that's printing trillions of dollars and just dumping it in there. And I don't think, they were claiming the catalyst for that big dump of precious metals was Trump's nomination of Warsh for Federal Reserve chair. That had nothing to do with it. That's just the excuse they come up with after the fact to kind of cover their tracks. But the idea that he's going to be some Paul Volcker is ridiculous. He's just not going to be. Trump wouldn't have nominated him for it if he was going to raise interest rates dramatically and shrink the Fed's balance sheet. It's not what Donald Trump wants. So why, the only possible, I suppose if he's playing 4D chess, but this would be like a retarded version of 4D chess where it's like he won't do what he wants him to do. So say he raises rates and, we go through a recession. He's like, he could blame the chair of the Federal Reserve for not doing what he wanted him to do, which was lower rates and blow air back into the bubbles. It's like, okay, but yeah, you just put him there. Like you nominated him. So it's your fault. It's his fault either way. So I don't really subscribe to that. I think he's going to get, this guy's going to do exactly what he wants him to do. But even if he doesn't, you're still not getting Paul Volcker. That's just not happening. You're not getting 18% interest. We just can't do it. You can't do it with $39 trillion in debt. Not fucking possible. Not possible. So the idea that we're just going to be these fiscal conservatives when, you got Trump doing the big, beautiful bill and all this stuff, and he wants housing prices to go up and lower rates. Nothing he's saying is pointing to that direction. Everything's pointing to the contrary. So yeah, okay, he nominated a hawk, I guess. He's going to be a hawk like Republicans are Republicans. Republicans in name only, hawk in name only. And you're going to get more money printing. You're going to get lower interest rates. You're going to get more inflation. I think the stock market will just continue to melt up. And I think the metals are going to go higher. Certainly ultimately higher. I don't know how long they're going to stay in this little drawdown here, but it might not be very long. And I think next week will tell us kind of what we're going to see. The reaction off of these levels, these are pretty key levels in both Bitcoin, silver, and gold. So we'll see how they react Sunday night when things open up, and Monday morning and all of next week. I think that will be a pretty good indication as to what's going to happen over the next couple of months, but we'll have to wait and see. I guess that'll I'll probably do it for today. I did have a bunch of shithole Chicago stuff queued up. It was actually probably a pretty good day. Let's see if Justin's awake yet for him to kind of forget. I hope he's okay. I haven't heard from him. Is Justin alive? Pretty slow news day. I mean, there was that story. Shit, why am I blanking on her name now? The journalist whose mom was kidnapped is fucking crazy. That's a wild story, and I don't think they found her yet, and she's probably dead. I don't know why I'm blanking on her name, but I haven't had any coffee today. I'm out of coffee. I gotta go shopping. I have not done a very good job of stocking this place. I hate moving. I just like put everything off and then buy things piecemeal. Just go to Costco one time and just get it all. But yeah, that's kind of the only story that's really been captivating the news cycle this week, as far as I can tell. So I had a bunch of shithole Chicago stuff, but none of that's really urgent. People are getting shot and they're spending a bunch of money and some fraud, obviously. But yeah, so it was kind of a slow couple of days in the news cycle anyway. So I guess this was as good a time as ever to bore you guys to death with some market commentary. And yeah, I think that's about it. I can get out of here on that and keep it a little shorter. I don't really have anything else to talk about, I don't think. Nothing I really feel passionate about. Although that video of AOC. Oh, man. There's going to be a lot of memes about that. Yeah. All right. We'll keep it a family show for today. Anyway, you guys have a nice weekend. We had a nice little happy hour last Friday. So this Friday's an off one. Next Friday is, I think Saturday, Valentine's Day. Yeah. Oh boy. Hate Valentine's Day. Yeah, next Friday we'll probably do another happy hour. So if you'd like to participate in that, you just have to become a supporting listener of the show. So if you go, I link to the Substack in every episode. If you go there and you become a paid, monthly paid subscriber, you get a little extra content that I put out in the Substack, and then we do the Friday night happy hours every other week, which are a nice little way to kind of kick back and hang out with people. So we'll do that next Friday. Then I think I'm going to go travel and meet my sister. So my sister's coming to Mexico for whatever reason, but not over here, over in Guanajuato, land of the frogs. So I think I'm going to go over there for a week and hang out with her. So I don't know if I'm going to bring my equipment or not. I probably not. I don't know. I got to figure out. It's one of those the only flight that goes over there is like those shitty discount airlines where you don't even get like a carry-on. It's only like an hour. It's like a tiny flight. So you can like bring like a backpack or whatever. So I don't know. Maybe I don't know if I'll bring the equipment or not. So we might take a week off there, February 15th to the 22nd. But yeah, thanks for listening. Hopefully this wasn't too boring. Maybe you guys got something out of it. These are some pretty crazy times. So if I do have any advice that is not investment advice, it would just be do not lever up. Do not get over leveraged. That's the only thing that can really wreck you. Especially if you're correct about your trade, whatever your trade is fundamentally, they will shake you out of these things if you're over leveraged. And you could be right. Like you could be, oh yeah, Bitcoin is going to 250,000, but you're not able to take the ride with them because you got shaken out being over levered, and your position, you were margin liquidated basically at 70. So yeah, be careful with the leverage. Yeah, be careful with the leverage. Buy the fucking dip. No, not investment advice. But yeah, that's kind of how I view things. I never mess with leverage. And yeah, you leave, with these big moves, you leave a lot of money on the table, but you stay in the game. And I think the most important thing is being able to leave the poker table with your chips, as opposed to being up big on paper and then getting wiped out one day. So I think I'll be leaving with a good amount of chips. If you stick to whatever your strategy is and don't over leverage yourself, you should be fine. So enjoy your weekend. We'll follow me on Twitter at Pedal Fiction. I'll be tweeting about probably precious metals, maybe some Bitcoin stuff from time to time if that interests you. What I see in the charts, if I don't get to a weekly market commentary or something like that, check my Twitter. There's usually some stuff on there. And I think it's just a good follow regardless. But I am biased. All right. So, yeah, thanks everybody for listening. Have a great weekend. And until next time, you know what to do. Just keep on peddling that so-called fiction. Peace.